Right, so we're now going to look at inventory adjustments, and specifically in this video we'll be looking at trading stock surplus or deficit. You should be familiar with the term trading stock, which refers to those goods that are kept for the purpose of reselling them to customers. Alright, so for example, a computer store may stock a lot of laptops or computers or desktops or monitors, etc. And those goods will be considered trading stock because the reason why the computer store has them is because they would like to resell them. Another entity may also have computers that they have, but the reason for those computers may be to perform office duties or admin duties, etc. And in that case it will not be considered trading stock but rather fixed assets. You'll remember that when we look at adjustments for assets, that we have a current picture which is normally shown in the pre-adjustment trial balance, and then we've got a true picture, which is what we're striving towards, and the way we get there is through our adjustments. Alright, so the current picture may reflect, if we take an example, that our trial balance has got assets of 5,000 Rand, and those assets may be, so here's my trial balance, and this trial balance may show that I've got trading stock of 5,000 Rand. So I've got total assets of 5,000 Rand in this entity. That may be the current picture. The true picture, however, may be that when we go to our storeroom and we do a little inspection called a stock count, so we take our clipboard, there's our clipboard, and we look at the list of inventory and we count them, and we find that we actually only have trading stock. Here's my trading stock inside. Right, we find that we actually only have trading stock to the value of 4,800 Rand in our storeroom. So the current picture says assets of 5,000 Rand. When we actually do our stock count, the picture is 4,800. The adjustment is going to be the difference, which is 5,000 Rand minus 4,800, which is equal to 200. Now there may be a number of reasons for this difference between the current picture and the true picture. Remember, we'll probably get this from our pre-adjustment trial balance. There may have been some goods in the storeroom that was stolen or lost or damaged, or maybe they were given away, donated, and we never recorded that in our records. So some goods went out and we've never accounted for that in our accounting records. Right. This means that my assets value in the accounting records is too high, and I need to decrease my assets to 4,800. So the asset in question here is trading stock. I'm just going to indicate that with a TS. So trading stock needs to be decreased. When an asset decreases, I need to pass a credit. You remember dead click says assets that increase is a debit, so assets that decrease will be a credit. So the account that I'm going to credit here is credit trading stock. Credit trading stock. That's my asset account. If we look at the second leg to this transaction, we know that we have, in this case, lost some of our asset, and in accounting, whenever we use or we lose an asset, we need to record an expense. So the second leg is there's an expense in our records that increased, and this specific expense is going to be called trading stock deficit. The expense increased. Whenever an expense increases, DebtClick tells us debit expenses. So my second leg is going to be to debit the trading stock deficit account with the 200 Rand. So my assets value is going to go down with 200 Rand, and my expenses value is going to increase with the 200 Rand. Right, that's if we have a deficit. Now let's look at the situation if it is the other way around. So now let's assume that my current picture still says that I have assets of 5,000 Rand, but when I actually go to my stock count, I find that there's assets or trading stock to the value of 5,300 Rand. Now my adjustment is going to be, again, the difference between the two amounts, 5,300 minus the 5,000 Rand. But this time, my true picture is greater than the current picture. So my assets, in actual fact, the true picture of my assets is actually that they are more than what I've got in my accounting records. So I need to increase the assets in my accounting records. So my assets, again, trading stock this time needs to increase in the accounting records. Remember, we're making the adjustments to the accounting records. So my trading stock needs to increase. Here it needs to become 5,300. All right. And when an asset increases, I need to pass a debit. Okay, so the entry here is going to be debit my trading stock to increase my trading stock. Right, so that's the entry if we have a surplus. So as we know, for every debit there must be a credit. So in this case, because we've actually gained in our asset, we've gone from 5,000 to 5,300 Rand. The reason for that may be a number of things. There may have been some goods that came in that we never recorded in our records. There may have been some goods returned by customers, that we never recorded in our records, or some other reason. Either way, our assets have increased, and because of that gain, we need to record an income. So the income that we're going to record is called trading stock surplus, and the income increased, so therefore we're going to pass a credit according to DebtClick. So my journal entry quickly is a credit to trading stock surplus, and that is the accounting of a trading stock surplus or a deficit. So for the first example, the deficit, we went from 5,000 to 4,800, so we had to decrease my stock. In the second example, we went from 5,000 to 5,300, so we had to increase the stock with the 300.